let's talk about understanding the multifamily apartment assets and how they're ranked. So let's talk first about the Class A apartments. What are those? Those are typically 10 years or newer and the brand new complexes that you see. Those are typically the top in market rents. They're located in great locations and they have great amenities. So a lot of times they'll have not only a workout facility, but maybe a sun tanning room, and they'll also have a mail center and a place where you can pick up packages. I've seen them where they've had dog wash stations. They've had places where the tenants can take their bikes and air up the tires in their bikes. They've had locking bike cages and storage units. So the Class A is really the top of the line where they're going for the creme de la creme, and they're willing to offer the amenities to attract those tenants that are willing to pay that top market rent. Now, is it worth it? It depends. Because with that Class A, you're pulling the top market rents, but it also comes at a price tag. So you have to weigh that out. Now, frequently in the smaller cities like Eugene, the newer properties that are built, those are being built by developers and being held in the developer's portfolio. So investors that want to buy in the Portland or the Eugene market, they're typically having to buy the Class B or the Class C property because the Class A stuff that's being built is being held by the developer. So now let's talk about the Class B. The Class B is typically 20 years or less. It's good construction quality. It's average to better than average construction materials. So that may include stainless steel appliances, vinyl flooring. It may have granite countertops. It'll typically have vinyl windows. You're also going to typically see covered parking. It may be carports, but you're typically going to have some covered parking. Also with the Class C, it may be dated a little bit, but they're also going to have typically some amenities. In the Class B properties that I see, they'll typically have a pool or a clubhouse or some type of amenity, barbecue pits, something that the tenants can go out and enjoy. I really like the garden style type of properties where it's more sprawling with green grass and shrubbery, and maybe it's 2 or even 3 stories high compared to a taller building that I call those more like the skyscrapers. You see a lot of those in our local market where it's in the university district area where they're building for density for the campus students, and they're building those 12 and 15 story tower buildings. Most market rate renters want to live in the garden style, kind of the Class B, Class C, where it's more sprawling. They've got ample parking, green grass, green shrubbery. For the newer stuff, especially the Class A, will typically see a washer and dryer included in each unit. Class B also typically has a washer and dryer inside the unit. The older stuff that was built in the 1970s, it may have a shared common laundry room. That's still a good situation because the tenant does not have to leave the property to do the laundry. They're able to do it there on site. Then the Class C is typically 30 years or older, and that's somewhat dated. They may not have any amenities. What's coming to my mind, it's typically a 1970s type era. It may have 1 or 2 washers and dryers in a common laundry area, but it's not going to have any amenities. No clubhouse, no pool. It's going to have on-site parking, and it's going to be a safe, secure situation typically for tenants to live there, but just not a lot of bells and whistles. But for some tenants, that's what they're looking for because they want affordable, dependable rent that they can depend on and know, hey, I've got a safe place to live and my rent is not going to continue to escalate every single year. It's interesting when I'm providing a pinpoint price analysis to a seller, I can tell pretty quickly whether they've raised their rents based on the rent roll on what year the tenant moved in. I just recently completed a pinpoint price evaluation for a seller, and he had a couple of tenants that had been there over 30 years. What does that tell me? That tells me that he gave them a great, dependable place to live, but he probably didn't keep pace with raising his rents. And that's also a little bit of a detriment because you're not keeping pace with inflation at that point. So as your expenses go up, as your property taxes go up, if you're not raising your rents to keep pace with that, it's hard to continue to make improvements to your property. So that's why with the Class C properties, we'll see them that maybe there's some deferred maintenance, they're just not really well maintained inside, or they haven't been remodeled and renovated substantially inside. That's typically because the landlord didn't want to raise the rent on the tenants, which I get, I understand, but it's a catch-22 because if you're not raising rents to keep pace with inflation, then you don't have the money to make the improvements. So I just recommend, if you're unsure of what market rents are, call a commercial real estate broker and ask them to do a rent study for you. I do that for serious investors all the time. I'll look at what their property is worth and I'll look at where their rents are in comparison to like and similar properties and what those properties are pulling in rent. That's called a rent study. You can also go to apartments.com and look that up, or you can go to Craigslist. I find Craigslist is a little hard to really get a good solid comparison. Apartments.com is a subscription service, so the property owner or the property manager has to pay to put that property on there. So if you think, well, why is my property not on apartments.com? You probably just haven't paid for the service. But the good news is it's a free website that you can go in, put your property address in or something that's near yours, and it'll pop up and tell you what market rents are in the area for like and similar properties. But again, if you don't want to do that work, just call a good commercial real estate broker. It's something that I can do pretty easy through their proprietary software that I subscribe to, and I could give you a detailed rent study that would show you what your property is worth. Because the good news is, if you haven't raised rents through the state of Oregon, you're allowed to increase your rents on an annual basis of 9.2%, so it may not be too late to raise your rents. I'm Rene Nelson with Pacwest Commercial Real Estate. Have a fantastic day.